All right, thanks a lot for that. Well, Abneesh Roy, the Executive Director at Nuvama Institutional Equities, joins us now to talk about what to expect. In fact, they have released a note where they talk about how their coverage universe revenues will grow just 5% in Q4 of this quarter compared to 9.5% that their coverage universe has grown in Q4 of FY23. So there's definitely a slowdown on the top line. Abneesh, tell us a little bit about that. What are the key expectations this time around, both on the revenue front as well as margins? And where do you see the outperformance coming from in terms of individual stocks?
Sure, thanks. Firstly, on your question of the slowdown, I don't think it's a slowdown. See, revenue growth this time is looking optically more than the Q4 YOY growth because of two reasons. In ITC's case, because of the agri base being very high, there will be almost 40-50% dip in the agri business for ITC on YOY basis. Wheat exports was allowed last year. Currently, it is not allowed. So that is impacting the overall sector because ITC is a behemoth. Second is there are price cuts in soaps, detergent. So those are obviously also now anniversarizing. But if you see in terms of a volume growth, clearly things are turning a bit more positive because of two reasons. One is on the rural side, if you see Nielsen data also, now no category seems to be kind of declining in the rural India, which was not the case in the first half last year when a lot of categories were seeing -5 to -9% kind of volume in terms of the rural demand. So that's positive. Second, of course, is companies are also giving back to the customer in terms of grammage addition and promotion. So that's also helping in terms of volume growth. If I see category wise, food companies clearly doing better. Biscuits and noodles, for example, we have been calling out that they are gaining from the unorganized competition because of very high inflation in the unorganized part. While you get a biscuit and a noodle at a 5 rupee, 7 rupee kind of a pricing, so that is clearly helping them. Apart from that, we are also seeing that rest of the segments also the healthy growth is coming back, partly because of base effect. Definitely health and immunity portfolio seeing good recovery. We expect almost 8 to 10%, 11% growth in this part of portfolio for Dabur and Imami. Yes, the only weakness will be essentially in terms of the cooling and all those summer related portfolio in terms of cooling hair oil, talcum powder, beverages, ice creams. But those will be for a few companies only. Dabur, for example, in spite of weakness in this part of the beverage portfolio, will see a healthy double-digit kind of a sales growth because international also is doing really well. International business should do well for most of the companies, faster than the domestic growth.
Abneesh, hi, morning. So, okay, let me make it really, really simple because the trends are going to be complex. I think even the quarterly updates have told us that Marico is, far more conservative and sounding a lot more somber on rural growth than, let's say, Dabur. So tell us this, in terms of the stocks under your coverage, which are the one or two which you think will post perhaps best-in-class earnings and where we may even see positive surprises?
Sure. So what is emerging here is wherever there has been a sharp deflation, for example, copra and edible oil, there has been a very sharp deflation. There is a regional competition which is coming back and companies have also seen negative pricing which impacts the operating leverage. That's why Marico, Adani, Wilmar kind of companies are seeing that challenge. In terms of companies which will outperform, clearly Godrej Consumer, Britannia, these are two companies which we expect strong numbers. Nestle also should be good. Dabur and HUL are kind of mid-tier, ITC also mid-tier, and Bajaj Consumer, as Mangalam also highlighted, that is one company in the small cap space which is really now finally coming back in terms of good double-digit EBITDA growth, good margin expansion, and good growth in the volumes also for Bajaj Consumer. So those would be the outperformers. In terms of underperformers, yes, Marico, Imami, and United Spirits, those will be in the lower tier in terms of various reasons, either because of deflation in their pricing in terms of the key products or in terms of the summer demand or United Spirits has sold off the part of the asset. But for United Spirits also, P&A should see almost 19 to 20% kind of a sales growth and almost 9 to 10% volume growth.
All right. And what about the recent hike that we saw in the Karnataka budget? What kind of impact will it have on United Spirits?
Sure. So it will have some impact. Essentially, what is happening is because of the freebies, every state government is announcing in the run-up to elections and post they come to power, This is a key overhang which liquor industry will see this year because now Madhya Pradesh, Chhattisgarh, Rajasthan will also be there. Coming back to Karnataka, the hike seems to be quite sharp, 20% in the spirits and 10% in the beer. But for United Spirits, we need to see on the BIO and BII what's happening because that's imported. So that may or may not see too much of an impact. But on the overall industry, if I see for the domestic IMFL, there will be a negative volume impact because this is sharp pricing. And Karnataka government needs 52,000 crore for the subsidies which they have announced. And my sense is the other state elections also will see a similar kind of a strategy by the political party. So this remains an overhang. Going ahead, United Spirits margins will improve, gross and EBITDA margins gradually. But in Q1, you will see gross margins remaining under not much of a improvement, while other consumer companies are seeing good improvement in gross margins.
Also in your report, you write how United Spirits has sort of underperformed in the last 4 years, if you look at it, right? Is it largely, do you think this underperformance is something that will continue over the next couple of years with its peers, or do you think at some point things could change?
No, things are changing under the new MD. Clearly, we are seeing a lot of proactive action, a lot of new brands, a lot of higher aggression on the activation part, much better branding. So that's on the positive side. When you see the reported numbers in our report, that's getting impacted because company has sold around 11% of its portfolio, which is the lower end. So that is just because of that. If you see in the core part of the business, United Spirits in the past few quarters is doing really well. P&A, we are seeing double-digit 20%, 25% of YOY growth. Of course, the base was impacted to an extent by COVID, and then in the base, BIO also was impacted. So those are helping. But overall, under the current MD, we are seeing definitely good recovery in terms of market share also versus a Pernod. There was initially Pernod in the last 3-4 years has done better, but now under the new leadership, it seems that United Spirits is getting back market share. Radico also doing well, but I would say that these 2-3 players are the ones who will really see the gains. But definitely this year, because of the tax hikes, there is a impact on pricing and volumes will also be impacted whenever that sharp price hike happens.
Okay, all right. Abneesh, thanks a lot for joining in. Appreciate your thoughts. We'll continue this discussion on the entire consumption space. There's an update that has come in what seems to be a surprise for multiplexes. The GST Council